What's up, everyone? Welcome back to the Infinity One podcast, episode number 9. Today, I'm here with Caleb Edwards, our special guest. He is an entrepreneur, investor, and co-host of the Own the Exit podcast. With over 150 million in real estate assets and a story that is rooted in purpose, resilience, and transformation, Caleb, he helps successful entrepreneurs build passive wealth while at the same time reclaiming their time and legacy. His experience ranges from running a landscaping company at 11 years old to leading missions work and eventually finding financial freedom through the real estate path. Caleb Edwards, thank you so much for joining me on the podcast, and I'm really looking forward to having this conversation.
Yeah, Zeus, thanks so much for having me. It's a pleasure to be able to jump on here with you, man.
Yes, sir. So I want to start off by asking you how you got started in real estate and what your journey has been like from the very start. So just talk
Yeah,
to us a little bit.
so the way I got started in real estate, as you mentioned, when I was 11, I started a landscaping business. I did that to help my mom, who was struggling financially, and ended up building that landscaping business until I was 26.
Wow.
I exited that company at 26. It was a multi-market, multi-crew landscaping firm serving Western North Carolina and upstate South Carolina. That's where I'm originally from, live in Kansas City now.
Okay.
But when I turned 18, I wanted to buy a fix and flip. I had to talk my dad into co-signing on a loan. I had some cash, but I didn't have any credit. And the reason is in North Carolina, where I was running my landscaping company and had my crew, at the time, it gets cold enough to where the grass and the hedges stop growing, but not cold enough for a lot of snow removal work or anything like that. And so I needed to find something to keep my guys busy during the colder months, and so bought a single family fix and flip, made about $13,000 on it after paying my guys to work on it for about 3 or 4 months, and that's when I got bit by the real estate bug, and I've kind of been investing in some way, shape, or form in real estate ever since. Now, you mentioned also when I exited my landscaping company, I spent about the better part of the next decade primarily focused in nonprofit work, missions work, did a lot of overseas missions, traveled quite a bit to South America, mostly Brazil. And during that time though, it was very purpose driven, and I loved every minute of it, getting to be able to, do something without profit in mind, without trying to figure out how to just make money with my time and my expertise and talents, but I realized you can take the boy out of business, but you can't take the business out of the boy. And so I was always finding ways to scratch the entrepreneurial itch. Part of that was investing in real estate. Part of that was I started a couple of side companies. I started a telecom resales company that did pretty well, did some other ventures that didn't do so well, and then started swing trading in the stock market as kind of my primary wealth building venture, and for about 5 years did really well at that. I think I had a year where I got like 119% return across my portfolio.
Amazing.
I was riding high, feeling good about it. And then in 2021, my 9-month-old son, Zion, he had a stroke in the leg, rendered the whole right side of his body completely paralyzed, and it took me out of everything. I mean, I had to take my hands off the wheel of the nonprofit work, the missions work, the trading. Didn't log into my trading accounts for 4.5 months. And kind of when the dust settled, I'd lost about 40% of my net worth in stock market losses and in medical bills. And realized during that time the only thing that had been working for me while I wasn't able to work it was my real estate. And so I started to look more in that direction. How can I allocate more here, but in a way that's more passive? And so I, initially allocated some of my capital as an LP in some apartment deals. They did well, and I enjoyed it. And I've always kind of been the guy, Zeus, in my network where people are always asking me, Caleb, what are you investing in right now? What are you doing with your money? All that kind of stuff. If I could, the number of times I've asked, I've had people ask me over for dinner so I could help them walk through their budget and their finances and all that kind of stuff. I mean, can't count, right? I don't know, I've just always been that guy to people around me, I suppose. And so the entrepreneur starts kicking in when people start asking me about apartment investing, real estate investing, and syndications and funds. And private placements and all that kind of stuff, and I was able to educate them with the knowledge that I had accrued over the years, but now was really becoming my main focus. The thing that I was putting more of my money into. And so the entrepreneurial wheel started turning, and I thought, man, I should just put one of these deals together. And then I realized that was going to be the opposite of the problem that I was initially trying to solve, and that was I needed to be able to find a way to invest and grow my wealth. My income was fine, everything was fine there, but I'm a firm believer that a wise man leaves an inheritance to his children's children, and so everything that I do when it comes to wealth building is about building a legacy for the next generation, for my kids and their kids. And so just a legacy of money, that's part of it, but really a legacy that gets money out of the way so that they can have the freedom to focus on the things in life that actually really do matter. And so that I didn't want to take backward steps. I didn't want to go and just put something together that was 100% my responsibility, my hands on the wheel. I was the person driving it. And so ended up having a conversation with a good friend of mine who'd been investing in and operating apartment buildings for a long time, Aaron, now my business partner. We ended up deciding, rather than me kind of go out and just do it on my own, which I knew I was capable of, I decided to partner with him. We became business partners back in early 2022, and kind of the rest is history. We've been able to grow our firm since that time to now we're at about 170 million in assets under management.
Amazing.
Placed about 40 million of investor capital into the deals that we put together, and we're just continuing to grow and try to serve as many people along the way as we can. I have a special place in my heart for entrepreneurs, successful entrepreneurs and business owners, because I know the pressures, the struggles, the hopes, the dreams, the things that we want to accomplish, and I believe that that what we've built here at Oak IQ Investments and some of our other companies, Multiplier University and Fundworks, and that we're really able to serve the entrepreneurially driven investor community in a very unique way, because we really understand what the needs and what the struggles are and what the fears are, and can really put together the right kind of opportunities that really help entrepreneurs and business owners be able to leverage high institutional grade real estate investments without signing up for yet another thing to manage.
Right.
So, yeah.
That's amazing. That was an amazing introduction, Caleb. Thank you. That's a lot to unpack, and it's amazing to hear that, everything, from where you started with your landscaping company, and then everything that you dealt with your son, and then, becoming super successful now, finding your business partner and whatnot. I have a lot of questions that I want to ask you. Can we start off I want to start recent. So how did you meet your business partner, and how important has it been to have the right partner alongside you? Because I know that real estate is a team sport, it's a collaboration sport. So just talk to us a little bit more about that.
Yeah, I mean, in terms of how Aaron and I met, we met probably a decade before we went into business together. And we actually met through church. We'd become friends because of our kind of shared entrepreneurial vision, and a lot of people in our circles were not entrepreneurially motivated. They were employees. They kind of had maybe a poverty mindset, and maybe even thought that having high ambitions in terms of wealth creation was sinful or something, and so you naturally gravitate towards the people that are like you. And we just discovered that we had a lot of similar interests, so we became friends. We would, did some, education courses, mastermind, that kind of stuff together, and just built a friendship over time. And then when everything happened with my son, and I was sort of seeing this transition back into a real intentional focus on real estate investing, Aaron was, one of the first people that I wanted to share that with and wanted to talk through that with. And as we began to talk through that, it just made sense for where his company was at the time, what its needs were, what my expertise and strengths were, for us to just begin talking through forming a partnership with one another. And that's kind of how we met. We didn't meet, initially with doing business together as the motivation. It was friendship. And, I hear competing things of like never go into business with your friends, never go into business with your family. Because of the way that I approach everything in life, I think the number one thing that you have to have with a business partner is relational equity and depth. And so I think friends who have the right alignment and the right skill set and the right competency, I think of a partnership like a marriage, Zeus. Like, I'm not going to, say that the girl who I can be really good friends with is not a suitable spouse for me. Like that would be the opposite of what is true. Like my wife and I, we met when we were in high school. She was, and we were friends first, and we developed that friendship, and then it progressed forward in a natural way to now we've been married for 16 years, have 3 beautiful children.
Amazing.
And I'm really happy that I married my best friend. My partner in life is my best friend. And so I think of it, the same with a business partnership, is you do have to be able to get along with that person and have some understanding of who that person is at a core values level, deeper than just their business acumen or their expertise. You've got to know that that person has the same values that you have, and the same desires, the same ambitions, the same things that they really care about and prioritize. It's very important to me that that Aaron and I both have a high value for our families. And we're not going to build our business in a way that takes us away from our family more than it has to. And that to me is so important, to build a business and to do business in partnership with people that value the same things that you value and that care about the same things that you care about. And it doesn't have to be perfect, alignment. It's not like I love fly fishing. Aaron has never fly fished in his life, right? It's not like we have to be like 2 peas in a pod.
Yes.
But in terms of how important, the question you had about how important, I think if you're going to really go into business with someone as a partner for the long term, then it's of utmost importance that you pick the right person.
Sounds good. Yeah. Yes.
Same as picking a spouse, right? The worst decision you could ever make in your life is marry the wrong person.
Agreed. Yes.
So.
Thank you so much for that answer, Caleb.
Yeah.
I appreciate it. So that was great. You also mentioned that you did a lot of work that was mission oriented and purpose driven.
Yeah.
Can you talk to us a little bit more about that? Because a lot of the work that I aspire to do in terms of developments, I hope that they are purpose driven and for the community, affordable housing, sustainable housing, and whatnot. So you talk a lot about like faith and like being purpose driven. Just tell us a little bit more about that and how you apply this aspect of life over to business itself.
Yeah. I mean, it starts with how my faith principles just inform the person that I am, and there's going to be some people that align with that and other people that don't, and I'm okay with both of those outcomes. So I think the number one starting point, if you want to build a life of purpose and a business of purpose, is it's the number one thing to building, the number one key to building a life of purpose and a business of purpose is it has to start with authenticity. You have to be willing to fully be transparently yourself. Because if you are not, then you are going to attract the wrong people and repel the right people. Because the wrong people are the people that can't discern fakeness, probably because they are good at misrepresenting themselves.
Yes.
Right? And so if you want to align with people who you really know and can be, and whether that's an investor, a business partner, someone that, you hire as an employee, whatever it may be, you have to really be authentically yourself, you know. And so I think that's step number one. That's rule number one, is focus on being specific, like explicitly you, right? Weaknesses, strengths, all of that, and just throw away caring about how everyone's going to view you and perceive you, and just know that the right people are going to see that you're the right person, and the wrong people are going to see that you're the wrong person for them, and that's actually really good for your business. The other part of that, I think, is not making it weird. I think a lot of like Christian, I'm obviously I'm a Christian. I'm a kingdom-minded entrepreneur, and I'm not ashamed to talk about the fact that I'm a Christian, that I have that faith, and that I believe the principles of the Bible to be true. I believe all of that to be true. I also don't want to make it weird and awkward like Christians in business can kind of have the reputation of doing, where they're not just honest about the fact they're building a business to make money. Like, I'm building a business first and foremost to make money. If it doesn't make money, then it's a waste of my time. And if I'm not, and not just not feeling like, oh, well, I got to just be philanthropic in everything that I think compassionate capitalism is the way to go, right? Not this awkward, weird, like, well, I've got to figure out a way to force my faith values into every single thing that I do, or I'm not being a good Christian, or I'm not being real, like, to my faith or whatever. It's like, I'm not going to get on every investor call. I'm not going to try to find a way to squeeze in a conversation about Jesus, right? Now, if I build that relationship for long enough and it comes up and it seems right to do that and the relational equity is there, then maybe I will have that conversation, right? But I'm not trying to make it weird. I'm not trying to just force something to happen, right? I'm trusting that God cares about my business as much as he cares about anything else about my life. And he wants me to be successful. And therefore, I think I just apply good stewardship principles and make good decisions, sound business decisions. Don't make a business decision based on, oh, I prayed and I felt like this is the right thing to do. It's like, okay, I want to pray about stuff, but I also want to like see the data and see the numbers and see that this is actually a good decision, because I'm going to ask investors to invest in this, and I'm going to invest my own money in this, and we're going to go and we're going to do this. And I don't want that to be off of kind of some subjective human supernatural experience, right? I want that to be off of, justifiable things that people can understand. And I think, so when you're building a purpose-driven business, I think the best thing that you can do first is be authentic. And the second kind of thing that comes up to that is just don't make it weird. Don't be weird about it. Just be normal,
Yes.
So.
Thank you. That was great. That was really, really great. And look, you mentioned authenticity, transparency, and communication. So with real estate right now kind of being like in an iffy spot and whatnot, a lot of investors being scared to deploy their capital because we don't know what's going to happen with the tariffs, the economy on a high level. Like, how are you approaching your LPs, your investors, your partners, and just communicating with them like in the current state of the market?
Yeah, I think the first thing is realizing that hard assets and publicly traded, paper assets, they behave differently in response to these things. And that's a part of, why I've transitioned the vast majority of my portfolio into hard assets, like real estate, like oil and gas, like things that are backed by real production of real stuff that real people need to make their lives work.
Tangible.
Because, public perception is the biggest cause, the sole cause of volatility in public markets, right? That's why you get a headline and suddenly it's not like, I think of Amazon, for example, right? Amazon recorded one of their best earnings reports ever for a quarter one this year. And their stock's down 12% over the last 30 days.
Well, I did not know that.
So it's all public perception, right? It's not like the company became less profitable, is earning less money. It's all about how people perceive it. Now, I understand the public perception is as well, if all this stuff happens, then what happens to their earning reports in the future? But at the end of the day, everything in public markets is speculative. at its core. Like you're guessing. You know, you're playing a complex guessing game, and people have gotten really good at playing that game and have made a lot of money. So I'm not saying you can't make money in the stock market and you should never invest in the stock market. You should never invest in paper assets. But I'm saying with a real hard asset, the value of it and the investability of it is so much more tangibly tied to how that asset performs. You know, it's I think of it like in hard asset, private placement investments, you really only have to be able to answer 3 questions. Question number 1 is, what's the revenue and how do I increase it? Like, what's the revenue source and how can I get more revenue? Question number 2 is, what are the expenses? And are there ways to create efficiencies to lower those expenses? And then number 3 is, who are the people, the team, the people that are responsible for executing plans 1 and 2? And if you can answer those questions in a satisfactory way, then you can likely be able to vet the investability of an opportunity. So take an apartment building, for example. We invest in a lot of apartments, right? We do development, we do value add. The revenue is rents. Are there any other sources of revenue that we could unlock that aren't unlocked yet? Okay, well we could add some covered parking and charge $75 a month for covered parking, right? We could add washer and dryers to every unit, or we could I don't know, set up vending machines. Like there's all kinds of things that you can do to add additional smaller drips of revenue that don't really add heavily to the expense burden. And so when you're looking at it, you have to see, what are the opportunities? How can I increase the rent? How can I get more? How can we add additional revenue streams to the asset without adding a bunch of new expense and new stuff to manage and maintain? And then it's, how can we streamline the management of it and reduce our operational expenses so that our net operating income grows?
Yeah.
And then who's the team responsible for doing that? Right? And it's the same with, we do some investment in oil and gas. We've got 1 revenue source, right? Well, 2, technically. Oil and gas, right? Yeah. Barrels of oil, and cubics of natural gas, or barrels of liquid natural gas equivalent, right? So how many of those is this target acquisition producing right now? How much can we sell it for? Can we hedge and lock in a bottom, costless collar or something like that, a bottom and a top, right? So we know how much we'll be able to sell the oil for within a realistic range, how much we'll be able to sell the gas for, and then how can we increase that? Well, we could take portions of the existing cash flow and reinvest it into new drilling programs to get more output so that we have more stuff that people need to sell. And then who's the team that's going to execute that plan, right? And so we partner with, large, middle to large market, mostly publicly traded operators who do the day-to-day operations, companies like Marathon or Continental Resources, that have big teams and, a lot of expertise and track record and audited financials and big umbrella insurance policies to mitigate environmental risk and litigation and all that kind of stuff. Yeah. So the point is that in those types of assets, it becomes a lot more tangible how you determine whether or not it's the right decision to invest. Whereas, because there's not as much, I'm not saying that it's not at all subject to, public perception, market perception, right? It is. There's still an impact to those things, but the impact is not as concrete and it doesn't produce nearly as much volatility. I mean, there's not a headline that's going to come out that's going to cause my apartment building to lose half its value overnight.
Right.
Completely agree. So I think that's the message we communicate to investors. And the tariff conversation on development, I mean, it's just kind of ridiculous in the near term. Yeah. Just being honest, because a lot of our building materials are sourced domestically. Kind of the most critical building materials, like Canadian lumber that we import, is tariff exempt. Mexican gypsum is tariff exempt, and people are overlooking the bigger factor in the near term for development, because of how much development has decreased over the last couple of years.
Agreed. Yeah.
So there's, the supply and demand reality that is a bigger economic driver than a tariff ever has been, right? Understanding that supply and demand is everything in a capitalist economy comes down to supply and demand, right? We know that, basic economics. You're an econ student at UCLA. You know this stuff to be true, right?
Yes.
And so when you look at it, it's like, man, there's 70% less building happening. That means there's 70% less demand on building materials. So is that going to drive building costs down or up? And even if tariffs come in and make it more expensive, is it still going to be less? Then there's a good chance, at least in the near term. I'm not saying there won't be a long-term impact, but investors getting scared right now, it's actually the best time to do it because it's a window.
Yep, it is.
It's a window that you can do it because maybe it will be more expensive to build 2 or 3 years from now, as existing supply reserves get absorbed and used, and we have to start importing more, and tariffs create an overall, transitory inflation situation where everything kind of levels up in terms of price. But that's kind of the message that we communicate is just come back down to common sense. Headlines are filled with agendas. They're backed by, people who want to get you scared to do stuff that they want you to do. And if we deny that, then we're just living with our head in the sand and we're not actually paying attention to the big picture. And then the last thing I'll say on that is, let's say it does get more expensive and it does get harder. Well, what are we going to do? Just stop?
No.
Like, are we going to just stop doing stuff because it's harder to do it? Or it's more expensive, or maybe in the near term or long term it gets a little more risky at times? It's like, no, we're not going to stop doing stuff. We're not going to stop building businesses. We're not going to stop building apartment complexes. We're not going to stop, like the economy can't stop. People can't stop doing stuff. So ultimately, it's like, if you're going to get scared off when it seems a little bit harder, then, well, that just means there's going to be more money for guys like me and you to make.
Right.
Because we're going to be the ones playing when you're sitting on the sidelines. And that's the best time to play the game, is when everybody thinks it's the right time to sit on the sidelines.
Yeah, that's when you have to dive in. Exactly. I like that. Everything you just mentioned is exactly true. I agree. One of my UCLA professors, he mentioned the exact same thing. It's a lot of investors being scared, but it's the best time to get in the markets and play in the game when everyone's sitting out on the sidelines. So I want to talk to you about AI. AI is something new that's coming up, and real estate itself, it's quote unquote like an old industry, and with new technologies, like new innovations coming in, how do you see AI being incorporated into this field, and are you using it in any capacity within your businesses?
Yeah, it's such an interesting question. I think it's something that he's talking about and thinking about right now is how do we take advantage of and leverage AI to build, to integrate it into our business in a way that makes sense.
Yeah.
And I'll start with more of a philosophical bent. I was having a conversation with Pace Morby back at Race Fest in Phoenix, I think where you and I first connected.
Right.
And he was just, and I totally agreed with him, and we were on the same page about it, that most of the things that investors are scared about right now are going to be massively overshadowed by bigger transitions that are happening over the next 5 to 10 years. And that is a ton of jobs are going to be replaced by more efficient AI and robots and machines. And I'm not claiming Skynet, Zeus. I'm not saying like Terminator 2 or whatever is about to happen. But what I am saying is, like, there's already AI that can do that can do accounting work, for example, with a much lower margin of error than a human. And it's only so long before it begins to replace real human CPAs and accountants. There's already cars that drive themselves. I have one. I drive a Tesla that has full self-drive, right? I can literally just tell it where it wants me to go and it'll drive me there. And there's robo-taxis and Waymos and stuff like that that are already driving vehicles, right? And so you go to the airport and the thing that washes and buffs the floor is now a robot, not a human being running a machine, but a robot. And it never has to take a bathroom break. It never has to take a lunch break. It can work 24 hours a day, 7 days a week, and be more efficient and cost less than a human being. And so I think starting the AI conversation at a philosophical level, but real life philosophical, is people that own assets, that buy assets, real hard assets over the next 5 to 10 years are going to be the people that are probably going to be okay. And the people that sit on the sidelines in fear are going to be the ones that are struggling, because they're going to be at risk of their job being replaced by a machine that's more efficient than they are. And so I think we're not just in a window of being able to, a window where it's a good opportunity to buy hard assets because of market volatility, because of near-term, fears in the market. We're also in a window where we may be stepping into one of the last legitimate buying opportunities to acquire assets that exists. And I'm not trying to be like a fear monger, and I hope that I'm wrong. But the reality is this, like, if you are sitting on the sidelines because you're afraid maybe that investment will underperform, then you're thinking about it the wrong way. Because you could lose your job in 3 years to a freaking robot.
Yeah. Completely.
And then what are you going to do? You're going to wish you bought up as many assets as you could have. Because you're going to be struggling. You're going to go from making $500,000 a year to being replaced by an AI that costs a company $300 a month.
Yeah.
It's
incredible.
So in terms of how we're implementing it, I mean, our team, we have, custom AI clones that, that basically can do a lot of communication stuff for us and things like that, write a lot of communication. It's a lot of copywriting and things like that. I don't think AI is still quite there. We still have to have a human touch because of my high value that everything be authentic. And an AI is only going to get it about 60 to 70% there, even if you program it in your authentic voice. But then there's other things that we're looking at. I mean, AI call setters, for example, is a big thing that we're looking at. We have a couple call setters that are calling potential investors and trying to get them scheduled and booked on a call with someone on our team to talk about our opportunities. And we pay those call setters a couple grand a month. They're international based call setters. We pay them a couple grand a month, but the reality is they can only make a couple hundred calls a day, whereas an AI can make like 5,000 calls simultaneously.
Wow, that's incredible.
So eventually, if that technology gets there, and it will very quickly, at some point it's like, how do you it's $130 a month versus $5,000.
Yeah.
So I don't like to replace people, but at the end of the day, you have to build a business that runs as efficiently as possible. So we're looking at all of those things. Another thing, and this is not something that we're doing, but it's something that we're thinking and having lots of conversations about, is I had a conversation with a guy up in New York who's exited like 9 tech companies, and he's very, very successful and very, very smart. Brilliant guy. Like, the ideas that he has are just like, holy crap. I would never think of something like that, but we started a conversation. I don't know if it'll ever happen or if we'll ever do anything with it, but like AI smart home.
Hmm.
like an AI smart apartment, like true smart apartment, right? It doesn't exist yet. Nobody's ever done it, but the technology is there to do it. Imagine you could have, there's AI technology that's available right now for sentiment analysis, for example. So if you're having, you're in your apartment and you have an argument with your spouse, that AI can listen. It's a localized box, so nobody else has access. They can't hack it, right? It's a native machine. That is just housed within your world, so it's not accessible to other people, to make it safe so that you don't feel the whole world's listening into your conversations. but it can analyze the conversations that you have with your spouse, with your wife, and
Wow.
it can send you a report every week of, hey, you and your wife, you argued 7 times last week, and in those arguments you interrupted her an average of 13.6 times and didn't listen to her, and when she said this, you heard her say something different based on what your response was, and so maybe try this instead, kind of thing. And then there's cameras with that same AI technology that can be installed in your refrigerator that'll scan every single food item that you have in your refrigerator and will create a meal plan based on the food that you actually already have in your house, with recipes and all that kind of stuff. And then there's the colon, a robot that could be integrated in that. It's like a chef robot, that is literally coming out right now, right? That's available for purchase in beta right now. I can integrate with that. So you got the AI that scans your refrigerator and your pantry. It knows exactly what food you have in your house, and then it communicates the recipes to this robot, and then this robot can actually go and cook your meal for you.
That's insane. That's amazing.
So, those are the kind of things that can happen based on technology that already exists, not
Yeah.
based on technology that could be built in the future,
Hmm.
right? And so those are things that we think about, that we look at, that are interesting to us. We aren't saying that we're going to be rolling out smart apartments in our next development, but I do think, being serious about this conversation in any industry and figuring out what are the ways that you can leverage this into your business, right now is the right conversation to be having.
Right, right. Innovation is definitely key, and that's crazy what you said. All these different technologies. I'm really really excited to see what's going to end up happening soon. So
Yeah,
it's
yeah.
really, it's exciting. Yeah. I want to, Caleb, ask you this. I know that right now it's like market volatility and whatnot. Like for you specifically, like what are some mental frameworks or like some disciplined habits that you maintain to like stay narrow focused and like cut out all the noise, cut out all like what the news, like what the headlines are saying, and just like remain like focused on like what you're doing and what you believe is true.
Yeah, my biggest, I'll give you 2 things.
Hmm.
I'll start with, I had a mindset hack from years ago that happened by accident, and it was when I started replacing the word discipline with the word integrity. Because a lot of people end up not getting distracted because they don't actually have clarity and execution on the things that they really want to do in their life, whether that's their health, focus on their fitness, focus on how they're going to follow through with their business, how they're going to execute, take action every day. And a lot of people, they say, well, it's because I need to cultivate discipline. And I was the same way years ago, right? I would sign up for a new exercise regimen. I'd stick to it for 60 or 90 days, and then I'd fall off the wagon and eat donuts. You know what I'm saying? And I think that seems to be more normal than not. But then I had this realization, Zeus, if I change, discipline has 3 connotations. It has a negative connotation in that I'm choosing to do a thing that I don't want to do.
Hmm.
Right? I don't want to go to the gym. Now, I love going to the gym. I actually want to go to the gym, but a lot of people don't. And for a long time, I was that way. I didn't want to go, right? You had to kind of do it long enough. It's like an acquired taste, right? It's like beer. You know what I mean? It's an acquired taste. Nobody takes their first sip of beer and man, that was good. They're like, oh, that tastes like urine. You know what I mean? But over time, people get an acquired taste for it. The same with working out for me, right? I got an acquired taste for it. Now I enjoy it. I love it. I want to do it. But at first I didn't want to, right? So that's discipline, right? It's like, okay, I don't want to do this thing. But if I do it, I'll get the outcome that I want, right? So it's all outcome based. So there's a negative connotation, there's a neutral connotation. That neutral connotation is it's not innately virtuous to do the thing, right? It's not innately virtuous to go to the gym. It's not innately virtuous to, to sit down and write 1,000 words a day to keep my mind sharp. It's not innately virtuous to try to read, at least 1 or 2 books a month. It's not innately virtuous to do those things. It's the outcome that I get from it. I get smarter, I get stronger, I get better.
Yeah.
And then there's the positive connotation of discipline that, well, if I do the stuff though, I'll get the outcome that I want. So then your ability to follow through is largely tied to your mood. If you're in a negative mood, then you're less likely to follow through. If you're in a positive mood, then you're more likely to follow through. The shift that I had was shifting from using the word discipline to using the word integrity, because integrity only has one connotation, and it's positive. I always want to be the person that I say I'm going to be, and if I say I'm going to go to the gym X number of times a week and I don't, then I'm a liar and people shouldn't trust me.
Yeah.
Right? Like, it's integrity that I actually follow through and do the things that I say I'm going to do, even if I'm just telling myself, even if it's just me. Right? And so that would be the first mindset hack. Is your question was not about a mindset hack to improve yourself, but it's a mindset hack to keep you from being distracted. And the truth is that if you don't have real things that you are aiming for, that you are going after, and that you are doing that with integrity, then the remaining white space in your mind and in your calendar, those are the spaces where you're going to get distracted, and you're going to start scrolling through X and looking at all the headlines, and you're going to start getting on CNN and Fox News and reading all of the stuff. And I'm not saying don't be informed, but I'm saying, like, be intentional about how you get informed. If you want to be informed, put it in your calendar. This is where I go and I read to get informed of what's going on, and I don't let myself do it more than that. And I do that with integrity. I say I'm going to do that in that way, and if I don't do that in that way and I give myself over to distraction, then I'm a liar and I can't be trusted. Right?
Yeah.
So that would be the first thing. The second thing is something that I call the purple dye principle.
Okay.
So back in ancient times, Roman times, and the Tyrian purple became the symbol of royalty, right? Because it was so scarce. The ability to get this purple dye was so scarce, right? The way that they made Tyrian purple dye, get this, this is a fascinating story. A diver would have to dive into the Mediterranean and get this specific type of snail called a murex snail, right? M-U-R-E-X. And get a bunch of these snails, like thousands of these snails, right? These sea snails.
Yeah.
And extract this, carefully remove this gland from underneath the snail's rectum. Squeeze that and extract 1 drop of purple pigment. And then they would have to do that thousands of times to get a couple of ounces or an ounce of purple dye that would then have to be fermented, dried in the sun, and then could be, made into a dye where, a robe could be dyed or, whatever. And that's why it was, royalty. It was like $65,000 an ounce is how, modern day equivalent for purple dye. And, now you can go buy a bottle of Tyrian purple, that color, dye at Target for $3. And the principle is this, that scarcity plus demand equals value. Scarcity plus demand equals value. The reason that purple has become the symbol of royalty is because at one point in time, it was one of the most scarce things on planet Earth. And so it becomes this symbol of abundance because of its scarcity. And I take that purple dye principle and I apply it to everything in my life that is scarce. And time is the biggest one. Because every second of my life that goes by is another second that I will never again suck oxygen on planet Earth. Every minute that goes by will be another minute that I won't ever get back. I can't control it. I can't change it. There is nothing I can do to get more time. And if I remember that, if I remember consistently that time is the most scarce resource that I have, and it is the thing that is in most demand from so many different places and so many different sources and so many different avenues. Everything around me is competing for my time more than it's competing for my money, more than it's competing even for my attention. It's competing for my time. It's trying to extract from me the one thing that no matter what I do, I cannot get more of. And so if I'm aware of that and I understand that and I keep that in front of me constantly, Zeus, then I will choose to spend that time wisely.
Yeah.
There's a guy that I had the privilege to interview on our Own the Exit podcast named Keaton Hoskins. And he and I were talking about this exact principle, right? I was sharing with him the purple dye principle, and he said, he thinks of it in this way. He said, if everybody could have what's the thing called, the sand that goes through the sand.
Oh. I know.
You know what I'm talking about. Gosh, why am I blanking on what it's called, Zeus?
I don't know. Oh.
Let's just say I'll reset. If everyone had a countdown timer that was sitting on their shoulder that they could look at any time, and it would tell them exactly how much time they had left to live, then how would that impact the decisions that you make every day? Would you spend 3.5 hours scrolling Instagram if you were able to see that you'll never get those 3.5 hours back, right? Would you spend your time focusing on all the crap that's going on in the world that you have no control over, that you can't change? Or would you give that time to the things that you actually care about and that actually matter to you?
Yes.
Right?
Yeah.
And so I think that's why I think through the framework of the purple dye principle of like, time is scarce. There's nothing I can do to get more of it. And so keeping that in front of me is what will lead me to the abundant life that I desire to live, because it'll allow me to have the clarity and the focus to pay attention only to and give time only to the things that really matter.
That's amazing. That's so amazing. I love that. The purple tide. That's amazing, Caleb. Thank you for that. I'm sure our listeners are going to find that super valuable because, look, in college and in university, a lot of people waste their time doing whatnot, and even like as people grow older, they're distracted. But what that timer thing, that's amazing for sure.
Yeah.
I'm going to keep that on me for sure. But Caleb, I want to ask you like these last two questions. During your son's health crisis, like what mindset shifts did you adopt? Like how did your perspective on life change, and how did you adopt those changes over to the business side?
Yeah, I think everything I was doing up until that point was my hands at the wheel. I was the solopreneur. I was the guy building all of this stuff, and I had the realization when my hands were forced off the wheel that everything would go off the tracks if I couldn't keep my hands on it. And I had misappropriated my desire for control. Business owners, entrepreneurs, people like me, we like to have control. We like to be in control. But the problem is being in control of one thing means that you're not in control of another. Being in control of my business and being in sole control of my business ventures, my missions work, my stock trading account, being the only one paying attention to those so that I could maintain 100% control meant that I didn't have control of other areas of my life. Because you only have so much time. It's scarce.
Yeah.
You have it's the purple dye principle. It's scarcity. And so I think the mindset shift that I had was I can remember I literally looking at my son laying on this hospital bed, not knowing if he was going to live. And I had this realization, man, of like, that could be me. And I wish it was me. I would much rather it be me than him. But if it was me and I didn't make it, would my family be okay? Because their well-being is tied to my ability to keep my hands at the wheel of every single thing, because I've not been willing to give up control. And therefore, I don't have any control over the thing that actually matters, and that's my family's long-term well-being. And so by then realizing, okay, I need to share control of everything that I'm doing so that I'm not the sole person responsible for every single thing, that was the mindset shift. That's what allowed me to, rather than go out and just immediately buy more real estate that I had to manage myself, that's what made me decide to first start by being a limited partner investor with other people who had expertise and could do it, and swallow my pride and say, I'm not the only person who can do this good. I'm not the only person who can do this well, right? And realizing that became such a liberation, where then I could actually take 4.5 months off and be focused on my family.
Right.
You know? And that would be, I think the big mindset shift is like, you go through something like that and you realize the things that you are trying so hard to keep control of are the things that you actually don't give a crap about.
Yeah.
Like, for real. And as business owners and entrepreneurs, we all say, well, I'm doing this for my family. I'm doing it. Get honest with yourself. You're doing it for you, or else you would do it different. If you were doing it really for your family, you'd do it different. You would actually take the money that you're making and get it working somewhere else for you in a way that's passive and doesn't require your attention, so you could actually start buying your time back rather than signing up for a bunch more stuff to manage. Like, if you were actually building wealth for your family, then you would do it different. So either just admit you're doing it for you, or start doing it different. And that was the realization I had. I had to admit I was doing it for me. And if I wanted to really do it for my family, then I had to change the way I was doing it. And that's exactly what I did.
Yeah.
And I just hope that it doesn't take that kind of hard life crisis for other entrepreneurs to come to that realization. Yeah. And that's honestly, like, under the surface of real estate investing and building apartment buildings and buying non-operated working interests in oil and gas and doing all the stuff that we do, under the surface, my like hidden mission, I'm exposing myself on the Infinity One podcast. My underlying mission is to get as many business owners and entrepreneurs activated to that reality without having to go through the crap that I had to go through. Because I would rather you do it the right way without having to almost lose your child.
Yeah.
Or almost lose something that's so much more important than all this other stuff that you give most of your time and attention to. You know? So, for what it's worth, that's the mindset shift that I had.
Great answer. Thank you. Thank you for sharing that, Caleb.
Absolutely, man.
I appreciate it.
Yeah.
Yeah, that was great. Caleb, I know we're kind of running short on time, but I want to ask you this for our last and final question. Like, what is the best piece of advice that you could give any aspiring entrepreneur, anyone wanting to make a change in their life and just become the best version of themselves?
Yeah.
Yeah.
Yeah. We ask this question on our podcast all the time, and it's if you could go back to an earlier, younger version of yourself and give yourself advice on building a business, building wealth, building a life, what would that be? And so that's how I'm going to answer this question, is if, you know, I'm talking to a former version of myself, this is what I would tell myself. Number one, it would be just start. Give yourself some runway. You know, I think there's a lot of entrepreneurial gurus out there that would say, well, you just got to put your back against the wall and put yourself in a no-win situation so that you'll come out fighting. And I think for the right personality, that works. But I think for most people, having runway and cushion removes the mental stress, right, of like having to figure out how I'm going to pay the power bill this month. You know what I mean? Like, just come on, dude. Like, give yourself some runway. Go get a job that where you're like where somebody else is paying you a salary for a little while, and get yourself some runway. You know, don't start with yourself underwater. You know what I mean? And then take action before you feel ready. because you're never going to feel ready.
Yeah.
You're
Agreed.
never going to feel ready to do it. And I know it sounds like old hat and everybody freaking says it. Every entrepreneurial guru says it. Everybody on LinkedIn and Instagram, it's like, the only way to success is taking massive action. But it really is true, because so many people sit around and they dream and they hope and they plan and they want, and then next thing you know, they're 65 and they didn't do anything that they wanted to do in life. Because they were willing to dream, but they weren't willing to take action. And I think of dreams like this. I came up with this acronym a few years ago for dreams. Dreams are distractions from reality that are energized by an anxious mental state.
Wow.
Distractions, dreams are like the cheese on the mouse trap. There's a reason why they're free, right? They're trying to get you stuck. Because if you can dream, people say, if you can dream it, you can do it. That's BS. If you can dream it, all that means is you can sleep.
Mm-hmm.
That's literally all that, because if you want it to become a reality, then you have to stop dreaming and start doing something about what you want. And so that would be the biggest number one thing that I would say to any aspiring entrepreneur or someone who wants to pivot from one industry to the next, who has a desire to do something more meaningful, whether that's make more money, build more wealth, have more impact, have more, prosperity in some area of their life. The way that you do that is by stopping the dream cycle and stepping into the action cycle. Begin to do stuff. Really begin to take action. So identify what's the one thing that I could do today that would move me closer to that desire, and then just do it.
That's
and
great.
Don't second guess it. Just do it.
Thank you. I appreciate that. That was a tremendously good answer. Yeah. It's all about taking massive action and what is actually going to move the needle to get you from point A to point B. So I appreciate that response, Caleb.
Absolutely.
Thank you so much. Thank you once again for hopping on, taking your time. I know you're busy and everything and doing all these ventures, all these great things. And yeah, it has been a great pleasure having you on, and I hope to stay in touch, Caleb. Thank you.
Absolutely, Zeus, man. Thanks so much for having me on your show.
Yes, sir. Thank you. Talk soon. Bye-bye.
All right. Bye.
Peace out.